Turkey's been seen as a market of stability, but 2012 saw a bit of a dip in deal flow. Where do you think the problems lie, and how can Turkey increase the amount of deal volume?
Yes, I mean, I don't think that Turkey actually saw a dip in deal flow activity because of its geopolitical situation and the situation with Syria. Much rather, I think the Turkish economy has generated a lot of good opportunities in deal flow. However, some of the top local private equity funds were fundraising last year and have raised over $2 billion in total. So they were very active fundraising, so the deal flow activity went down a bit. At the same time, it takes time to build up deal flow, and they normally materialize 9 to 12 months, or maybe 6 to 12 months after you've actually engaged with the company. And therefore, we expect the deal flow maybe to pick up early next year, or deal activity to pick up early next year. In addition, I think it's important to point out that the majority of the deal flow is actually the lower mid-market. So there are about 10,000 businesses in Turkey that are relevant for private equity, but there's maybe 5 funds that are active in that segment. Whereas at the top end of the market, where these are maybe businesses with a turnover of more than $100 million, where there are about 500, there are actually currently maybe up to 50 funds from Turkey, the Middle East, Eastern Europe, and Western Europe, the US, chasing transactions. And this mismatch of capital has actually created a big value gap, let's say, on value expectation differential, which isn't overcome very easily, so fewer deals actually get done at that end.
Are there enough deal opportunities in Turkey for this $2 billion of fundraised capital to be deployed?
I think the local funds are best positioned to actually deploy that capital in that space, as opposed to some of the fly-ins. However, these are pretty large numbers for Turkey. They're definitely at the top end of what the Turkish market can take. There are very few very large companies, and most of them are family-owned and not always for sale. So I think it'll be a challenge, but I think the local funds that have raised that capital are well positioned to actually take advantage of the opportunity.
And lastly, what's your outlook for private equity in Turkey in the coming months or years?
I think it's very, very positive. I mean, now there are maybe 6 locally managed, locally governed GPs. We are one of them as Pera, and going forward, there's going to be maybe one a year that gets added to the list of GPs, so the market will mature slowly but surely. I think the deal opportunity will continue to increase dramatically, as opposed to many other parts of the world where the economies are slowing, the Turkish economy is slowing to maybe more moderate levels, but the Turkish deal flow environment hasn't slowed at all. I think there is a lot of activity, and you'll see lots of news coming out in the very recent future. I mean, we recently had a deal in the mortgage processing title business. There were other deals being done by some of our competitors, and I think it will continue for all of 2013. So I look forward to a pretty active year.
Overall, a positive outlook then.
Definitely.
Thank you very much.
Yeah,
Thank
you're very welcome.